Good evening, everyone. I want to welcome you all to another episode of Miracles on Earth. I'm your host, Miracle Shamir, and I'm joined here tonight by a wonderful guest, Shantrese Zackery. How you doing, Shantrese?
Hi, how's everyone doing? I'm doing well.
Awesome. Thank you so much for joining us tonight.
Thank you for having me.
Yes, it's such an honor. It's good to see you.
You as well, and it's good to be seen.
Amen. That's right. And not viewed. That's how the old folks say. It's good to be seen and not viewed.
Yep.
All right, so I want to give you a moment to just introduce yourself as our guests are coming in and those that are watch the replay, and they'll know who you are and what you do and what you bring to the table in the financial industry.
Well, my name is Shantrese Zackery. I'm a mortgage loan officer. I am a licensed officer. I work for First Mid Bank and Trust. I have been in the banking industry for the last 15 years. I started out on the retail side as a teller. I am now as a mortgage loan officer. I've been on the mortgage side for the last 9 years. Actually love the industry. It is a wonderful way to get to meet people, to help people with their financing. Um, so, yeah, that's a little bit about me, at least professionally.
Yeah, wow, 15 years, that's a long time.
It is. I can't
You
believe it's
don't
been
even look
15 years, though.
15.
And I get that all the time, like, are you old enough to talk to me about my finances?
I'm sure. So
Yeah.
what exactly inspired you to go into the financial industry?
You know what? That was my major in college. So I started out doing part-time banking as a teller during that part. And honestly, and working in retail banking, that was a fast-paced way to work. But I started to look for other avenues of what I was going to do long term. Kind of looked into commercial banking, looked at mortgage loan officers. I kind of picked this based off of who I've seen in those roles, and did I see that they were enjoying themselves? Did they have some excitement about what they were doing? And
That's
I was like,
good.
you know what? Those are the people I see in the big industry who are enjoying themselves, who look like they're happy. So let me see what that's about.
That's good. So it sounds like you got inspiration from other people. So that's a great thing.
Yes, that is actually a lot of what this industry is. It is all about networking, building relationships with people. You work with people who you work with for years, and you just never know when it comes back around when you'll meet them again.
Wow, that's amazing. That's amazing. I'm really proud and just love what you're doing. It's just amazing to see you as a grown woman now. It's
I know.
beautiful. Look, we were 14 and 15, right? Just
I know it's
yesterday.
crazy. From high school now, we're all grown.
Yes, yes. So you mentioned building relationships. How important is building relationships in the financial industry and the home buying process?
It is one of the key components of working with people because people want to be able to trust you, especially in the financial services industry. We are touching bases. We are really getting into the thick of getting to know them and their personal details. You're seeing a lot of their information, and they want to know that A, they can trust you with that information, but
Mhm.
that you are going to listen to their story and be able to process a transaction that works best for them.
For sure, for sure. That's good. So many people find the home buying process intimidating. What advice do you have to those that they don't know where to start, they're afraid, they don't feel like they qualify, just afraid, fear?
You know what? I hate that people think that because really reaching out is your first step. Just talk to a lender, talk to a real estate agent, talk to anybody in the industry. You shouldn't be intimidated at all. Like I, as a loan officer, I'm the person that you filter all your questions with. I don't care if you think that they shouldn't be asked. If you feel a little weird about asking, ask the question. It's better that you know that information. To get started, though, it is good to look at your lender first because you want to get a pre-approval. That pre-approval letter will allow you to know what you qualify for. You can know what those payments look like. You can know how much money you are planning on spending, and that will give you some a sense of security when you're out there and when you're ready to place an offer.
That's good. So let's backtrack a little bit. Let's talk about the process. So when someone is desiring to buy a home, what steps do they need to start with? Where do they start? How do they get themselves prepared for even contacting you?
Really, a phone call. You don't necessarily have to have anything prepared. You can just call and we'll lead you and guide you through. But if you are wanting to come to the table prepared, one of the things that, well, a few of the items that we ask for, you know that we will pull credit for you. So you can already review your credit, whether that's like myficoscore.com where you looked at it. If you have any other avenue, like straight from the credit bureau, sometimes through your bank accounts, they'll give you updates and credit scores. You can have an ideal of where you are. We will ask for income documents if you're doing an actual pre-approval. So some of that will be your last year's W-2, if you have 30 days of pay stubs and one of your bank statements, and you are good to go. So those are minimum documentations that you need. You don't really have to, even throughout the process, get anything too cumbersome. The one thing that I think clients don't find readily is if we need tax returns because you're like a business owner or something of that
Mhm.
sort. Get your tax returns, have all schedules available.
Okay. So if I am a business owner, do I, how do I, if I am a business owner, how do I prove that to the bank?
Well, you'll have a licensed business, so it'll be licensed in whatever state that you're in, and we'll
Hmm.
be able to look at it there. But also, if you're filing tax returns, you have to have filed for the last 2 years for us to be able to get a good idea of what your income is and your business projection. Because we want to see that the income is increasing year over.
Great, great. So I did have someone ask a question during one of our previous interviews. They asked if they owe the IRS, can they still be approved or pre-approved for a home?
Oh, that is a great question. Yes, you can. You sure can.
Oh, wow.
Um, a lot of people think because of credit situations that you aren't going to be able to be approved. What happens is if you owe the IRS, if you're on a payment plan, we're going to consider that payment that you have with the IRS and your debt to income ratio. Debt to income ratio means all of the debts that you have out there reported to credit. So it won't
Mhm.
be your rent, but items like student loan payments, it'll be credit card payments, auto loans, personal loans, things of that nature. And we will just include that part. So it doesn't stop you from owning a home at all.
That's good news. That's good news. So you
Yeah.
mentioned student loans. Do my student loans have to be actively paid or can they be in forbearance?
So it depends on the loan type that you have. So there's
Hmm.
so many options that you have with student loans. If you are, for instance, FHA is one of the loan programs that we can use. That is a government-backed loan. On those, you just don't want to be delinquent in the loan. But if you're in forbearance because we had like the pandemic, we had to stop, or
Hmm.
you are in that grace period, or whatever reason they aren't, we will consider that payment depending on the loan program that we are using, a percentage of what you would pay had it not been a forbearance. But if you are on one of the income driven payment plans and you have your letter from your lender on that one, we can use that payment.
Oh, that's good.
Yeah, so
That's
that is a possible way to get that debt to income ratio lower.
mm, that's
So
good.
yeah.
So what is the target area that someone would want to be in when it comes to credit, or what's the lowest number that you've seen for someone to get approved?
So typically you want to at least have a 620 credit score. We do have programs that go as low as 580. Those are typically FHA loans. Those we might have a little bit more documentation that we need up front because you're kind of getting some more information on those because it's a manual underwriting, a little bit different.
Hmm.
But as long as you have a 620, you are probably good to go. But there are home buyer grants. And home buyer grants, that's a different scenario too. They want you to have most times at least a 640.
Okay.
So if you're looking for those grants that can help you with down payment and closing costs and you want to have a 640, ideally, if you are just out there in the market, you always want to shoot to have a 700 and above. You don't want to necessarily be close, but if you are, don't let that stop you. Let
Okay.
somebody review everything with you, pull credit for you, let you know what you should do.
Okay. That's good. That's good. So you have seen someone as low as 620 get approved. That's good.
Yeah, I've done loans that were under 620. So
Wow.
they get approved. I've had that loan close that I'm thinking of recently, in less than 2 3 weeks from initial contract to getting the clear to close. So it's not that it stops you. On those, you just don't have grants necessarily, but there's all type of programs. There's something available for everybody.
That is good. That's really good. I hope you guys are writing down this information because that's good because most people, like I stated in the beginning, they're intimidated when it comes to buying a home because either they don't have any credit or they don't have enough credit, or even in college, they may have got the express card and ruined their credit.
Yeah, that's actually one of the big misconceptions is having to have a large down payment or not understanding that there are other credit terms and options that we look at. There are programs even where if you don't have any credit, we can look at alternative trade lines. So there's really nothing to stop you from walking in the door and for you to find out more information. And even if you go to someone and maybe you didn't have a good experience or they just denied you, there's other options with other lenders because everyone may have a different program that might be better for you. So you always want to shop around.
Wow. So if someone is coming in the door, can they sit down with you and maybe you give them a game plan of what they need to do to make some adjustments and make some turnarounds?
Yes, actually, those are some of like the most rewarding clients that you have. People who walk in the door, they might have something going on credit, and you work with them to get them to the point where they are qualified, and they close. But that's pretty much what we do all day. Look at the situation, tell you what you need to work on, and then you want to touch base. Just have some checkpoints.
That's good. So when it comes to the down payment assistance programs, is that something that you recommend a client, or how have you seen that either help or hurt a client?
They rarely will hurt a client. They generally will help you. Now, in some scenarios, depending on the program, they may have a interest rate that is particular to that program. Now,
Mhm.
if you have a high credit score, sometimes it will work best for you not to use that grant. If you are somebody who has a large down payment, sometimes it's better for you not to use that grant because you can get a better rate without it. So we kind of look at and we listen to what their game plan is, how long they plan to own that home. Would it be better for them to do that? And one of the things too is if you are in the market and you're ready to purchase now, you can always think about the refinancing later. Because I know one thing that's come up within the most recent couple of years, especially after rates were very low that we probably won't see again. Our interest rates are higher. What should we do? Should I wait to own? No, you can buy your property now and you can refinance. So there's different ways to navigate. So you want to work with somebody who is listening to your full picture of what you want for the next few years.
Good, good. That's good information. In terms of bringing money to the table, what exactly are lenders looking for when it comes to how much money a person may need to have saved or what they need to be working towards if their goal is to buy a home this year?
So you want to save as much as possible. It really depends on the person and what they are trying to do. So if you're looking at a home that you want to purchase, and you know what price range you're in, you're looking at having a down payment if it's a primary residence of at least 3.5, 3% to 5% is what you want to have saved, or whatever the value of that property is. And then you want to have at least an additional 3% for closing costs. So closing costs, depending on the area, because from state to state, city, county, it'll be a little bit different. You want to have that additional $5,000 to $7,000 cushion there
Mhm.
outside of just the down payment.
Okay, good. So can someone use funds such as 401k funds or TSP, I think it is, funds?
Yes, you can. You can use your retirement funds. That's one of the transactions that they allow you to remove funds from the 401k early. You can use that for down payment and closing costs. So if you have multiple accounts from different previous employers, you can use those. And it always is best when you do the application, just talk to your loan officer, give us more information than we need. If we don't need it, we'll let you know because you may have like plenty funds in just one account.
Okay, so you mentioned that that's one of the reasons. So are you saying that there's not a penalty when someone pull funds from 401k early?
That I'm not a tax advisor to advise them on what their penalties are.
Hmm.
But it's one of the options where an employer will allow you, whether you do a 401k loan or you pull from it early just for the purchase of the home.
Okay. Okay. Well, that's good. So I read your bio, which was amazing. You mentioned that trust is a key component. Can you share um, in the home buying process how you build trust with your clients?
Really, it's that initial appointment, whether they reach out to you, is getting back to them quickly, listening to them. Like I had somebody reach out to me who I talked to maybe a couple months ago, last night around like 7 p.m. Just text me like, Shantrese? I'm like, yes, it's me. Are you ready to buy a house? And then we went through the entire process. Um, I talked to them, and actually today when I followed up after he submitted the application, he was like, "You know what? You were one of the few people who actually responded to me, who had a back and forth conversation with me, and who actually gave me advice." So that's one of the key things is just being there to listen, and then tailor their needs based off of what they say. Because a lot of people will just, hey, you want a mortgage loan? Here's an application, fill it out,
Hmm.
without ever even having the conversation.
Yeah, yeah, for sure. Yeah, so trust, I'm sure that helps people feel comfortable with you and comfortable going through the process and taking away that intimidation.
Hmm. Yeah, it shouldn't be intimidating at all. You don't have to dress up and do anything for an appointment. You come while you're at work, off work, on the lunch break. We are talking to you at all hours of the night, too. This is one of the jobs where we are working around other people's schedule because most people are working 9 to 5 or they have a strict shift. So
Hmm.
come as you are, come when you're available. Don't worry about having to present yourself in a certain way.
Good, good. So is there a certain salary bracket that someone may need to be in, or is that based on how much house they want to buy?
Actually, not at all. So you don't have to have a specific salary whatsoever. Um, Income sources are typically, yes, from employment or self-employment, but there are other income sources that you can choose to use, whether that is alimony, child support, social security. Those are all income sources that you can use to qualify for a home. Of course, you don't have to. And in none of those situations is there a specific amount of income that you need. Because someone could have a lower income and have no debts. Someone can
Mm.
have a very high income and a lot of debt. So really, that debt to income ratio is the most important part.
Okay. So in terms of debt, I know a lot of people may have collections on their credit. Do they need to pay those collections before starting that home buying process, or should they wait?
So that you still want to reach out to your lender, have them pull credit, because that's going to be very scenario specific. Sometimes that collection account has been out there long enough where you paying it off actually is not going to be beneficial, and you want to save those funds that you could use for down payment and closing costs. Sometimes it is something where it's new or it's lower, and you do just need to pay it off and have that help raise your credit score. But it depends on the scenario.
Okay, okay. So when it comes to piggybacking, I know I've had a few real estate agents on our broadcast the last few weeks. When it comes to
Mhm.
piggybacking off someone else's credit, is that something that you guys take into consideration as well?
What do you mean by piggybacking off somebody else's credit?
Like if my mom has a American Express card, she's very high limit,
Mhm.
on time payments, can I be added as an authorized user to her account? Does that help me?
So yes, it does help when you're an authorized user of someone else's account, and especially if it's somebody who has a good credit score, it can help with your credit score. But as a mortgage lender, we are looking for accounts that you actually manage and you have shown that you manage well. So if you have a light credit history and all you have are authorized user accounts, then that would be something where we're going to be looking at alternative credit lines then. But if you have that in addition to your own accounts where we see that you have actually made those on time accounts, because really that credit is going to be more specific to that person who's taking out that 30-year mortgage or 2015 year. In some of those cases, you can make that up if somebody has like an authorized account. We might ask for receipts for the last 12 months because that's an indication of you making on time payments, but that doesn't necessarily report to your credit report.
Okay, good. In terms of credit, just kind of want to stay there just for a minute because I know that's the most intimidating thing that people deal with. So, in terms
Mhm.
of credit, say during COVID, I got laid off, had a hard year, kind of like most Americans, and I had some missed payments, some late payments. What, how far back in the portfolio are you guys going?
So credit typically stays on the credit report for 7 to 10 years. But that's why people should not be intimidated. We understand it. Underwriters understand. Underwriters are not there to deny loans. Trust me, I work with a great team of people where everybody is trying to help you get into that home. Even on the back end, the underwriter, we're all looking at options for you. Um, so if you actually have a situation, whether it was medical, whether you were laid off in the pandemic, there are letters of explanation that you can write to explain why you may have had a situation on the credit report that didn't look so good. And that way we can see, oh, well, after that, prior to that, you've had a great payment history. Even after you've had a great payment history, we understand that life happens to everybody. So that shouldn't be a reason to deny you a loan or to be able to buy a house. And even as far as the guidelines that we have to go by, guidelines will change and update. So during the pandemic, when people were, whether they were losing their jobs, the guidelines shifted and changed because we'll have more gaps of employment, more people losing jobs, more people having to move to different industries. So, in our industry as a whole, we are looking at the things that are going on just economically within our system to see what we can do to help people get into homes.
And what is the time frame on a job you guys are looking for?
We're going to look at your 2 years of employment history. That does not mean you need 2 years at the same employer. It just means 2 years. You could be somebody who, especially I am in Illinois. We are a manufacturing hub. A lot of people work in manufacturing facilities. You could have worked at 4, 5, 6, 10 manufacturing facilities. And you're just somebody who keeps a job, but hey, if you find somewhere that pays you better or it works better for you, you move. You've still been employed for 2 years. That's going to be no different.
That's absolutely amazing. That's good
Yeah.
to know because I know I talked to a lender last year when we were in our process, and she was like, "Oh, you needed to have been on this specific job for 2 years." And one thing about me, I don't give up. So I called another lender, or I called another agent, and the loan went through in like less than 30 days or so.
Yep. See, and that's why you always want to shop around. Don't be intimidated by somebody's no, because they might not have options, or they may have not given that time to look through your entire situation and found options for you. Because someone like me, I will look through. I will make sure I find a way to make it work.
Oh, that's good. So you're only licensed in the state of Illinois, is that correct?
No, we're licensed in a few other states, so we do mainly Illinois, Wisconsin is where it happens, but there's other states that we can lend in. Not all 50.
Okay.
Texas, we can do loans in Texas. There's some other areas.
Okay. So if someone is in Georgia and they have questions for you, are they able to call you, or is that something that's outside of your jurisdiction?
Georgia isn't going to be one of them.
Okay.
I wish.
Gosh. Are you able to connect them to someone?
Well, yeah, there's other lenders that I can connect them to,
Okay.
so they can get the home buying process going. And also, if you're somebody though in the state of Georgia and say you are moving to Illinois, moving to Wisconsin, you can still contact me.
Okay. Good. And a lot of people face challenges during this process. What are some ways that you are able to help people get over those challenges?
Solutions, running solutions. A lot of that, the mortgage industry for someone who's working there, it can be stressful because there are a lot of times where you're looking at how to make this work. What other options do we have? Really, it's being very solution oriented. Okay, well, this right here isn't going to look the best. So, what do we have? Do they have reserves? Meaning, do they have extra funds showing that they are somebody who is able to maintain a good balance in their account? They're somebody who keeps the savings. So, you're always looking at different options of what they could have.
Okay, I like that, solution driven.
Mhm.
I love it. So, in terms of accounts, what are you guys looking for when you're going through people's bank accounts? Are you looking at my spending habits? Are you looking at me getting my nails done every 2 weeks? What are you guys looking for?
That's so funny because people always ask that, like, "Oh my gosh, you know I'm a business. You know I go to Starbucks every day." I'm not looking for Starbucks on your bank statements. I don't care. I'm not looking at what you bought your kids. No, what we are generally looking for is if you have income from a job that's a W-2, that direct deposit is going into the account. If you do have a lot of cash deposit, because in the mortgage process, you can't use anything that we can't trace. So if there's a lot of cash deposit, then that's something that we'll question, like, where did that cash come from? Most times, if
Mm,
it's coming from another account into that account, then we're getting an additional bank statement from the other account that you're pulling it from. We're not really looking at the day-to-day spending habits. It's really, do you maintain that balance that you have in there? Do you have the funds that are showing that it's going into that account? And if you're pulling funds from that account, are they all there and they can be accounted for before the process starts?
okay. Now, can I use gift money? Can someone give me $20,000 for my closing?
They sure can.
Okay.
So you can have someone gift you funds. Typically, if they gift you funds, you don't have to do anything prior to. But if we see that large deposit, we would have you write a letter of explanation. And there is a gift kind of letter or form that most lenders use where you'll just show where that gift came from, and that it is a gift and it's not something that you are being loaned and have to pay back.
Okay. Are you gonna ask for the person that gave me that gift? Do you need their account statements?
Not all the time. It depends on the loan program.
Okay.
For a conventional loan, typically we won't need it. For an FHA loan, that one with more documentation, yes. And in those situations, sometimes people are comfortable enough to have like the financial conversations with like family members, whoever gifting the funds. But I'll always tell them I can reach out to the person gifting you the funds, let them know that I'm also not looking into their bank transactions to find out what they're doing. And they can send it to me directly in case they don't want to share it and they understand where it comes from in the process of it.
Okay. So if I'm a say my grandmother, she keeps cash on hand, or she got this big lump sum of money and she gives me the money in cash,
Mhm.
like she didn't give it to me out of her account. Is that something that you guys will be able to accept?
Not cash. It'll have to be traced. So if it was a lump sum from, say, a lawsuit was one, then as
Hmm.
long as you can trace the fact that that's where it came from, then that's fine. It's good to go. But if you are someone who has a lump sum of cash, then you can put it into your account because you want to have it in a banking institution and let it season for 60 days. After
Hmm.
that 60-day period, we will look at an updated bank statement. At that point of season, we're not looking at that transaction anymore. So there's
Oh,
different ways around. That's why you want to ask those questions when you talk to a loan officer.
oh, that's good. That's really good. So you've worked in the mortgage loan industry since 2015. How has the industry changed, and how have you adapted to those changes?
It has it, been all over.
Yeah.
Where rates initially when I started, rates were 4 to 5%. They were kind of normal. It was a lot of people calling. That the market was doing well. There were a ton of homes to purchase. That is what we were used to. And then we got to time of the pandemic.
Mm,
And when home sales were decreasing because the inventory just wasn't there. Because we are
mm,
at a point now where some of our older individuals, they're not leaving their home. They
mm,
have a great home, they have a great interest rate, they're staying. And then for people who are millennials and younger, they're ready to purchase new homes, but those homes are not there. So then you have a lot more buyers, people who you're pre-approving, and they're telling you like, "Hey, we're struggling with this. How can we make our offer stronger from the lending side?"
mm,
So for us, it could be, well, we can close the loan sooner, so that could
mm,
be advantageous to the seller. We could do a loan type that works for them. It depends. Like if we need to make a call and tell them like what our pre-approval process is to the seller so they understand like, hey, this person is good to go. I verified everything before. The only thing that we need to look for now is an appraisal. Sometimes that's advantageous for them to just know the process and understand that somebody's looked at it. It's already been underwritten and that buyer is good to go. But market rates, during the pandemic when those were low, it was another great time.
Mm-hmm.
And now, especially for people who were new to the mortgage industry, when they were looking, then they're like, oh, well, I had a 1%, a 2%. And they're
Mm-hmm.
like, now, well, 6 to 7%, these rates are high, they're too high. Like, actually, this is more normal. It's way
Mm-hmm.
more normal than you think. Because prior to like my parents' age, um, their interest rates were sometimes like in the double digits, 15%,
Oh, wow.
10%, 12%. So they aren't even used to those lower rates. The people who didn't refinance now realizing, oh, you could refinance. And then now we're figuring out like this is our new kind of area and place that we'll stay. So it's been up and down, and the adaptability is being on top of your guidelines, knowing the changes based off of the market and the housing
Mm-hmm.
and the job market as well, where things are going, and just being able to speak to people in their situations. Like you mentioned, the pandemic, people lost jobs, understanding that sometimes that's going to be a sensitive subject for somebody who is prides themselves on being able to keep work and
Sure.
um, going into the office or going into the plant and working every day. It's a different scenario. You just have to be available to listen, know your guidelines, and knowing ways to work around it.
Okay. Now that's very insightful. You mentioned the market. I know a lot of people. I've run across a few ads or Google posts that saying like, "Oh, the market is crashing." Like they put a sense of fear out there where people are afraid to buy a home in this market. So this is pretty much the norm. Do you see it going lower, or is this kind of a good time?
It's always a good time when you are ready and you have the cash to purchase. It's always going to be a good time for you. We really don't want to, especially when it comes to a mortgage, because this is an asset that gains value. That you want to play games like you are in like a day trader. You don't
Mm,
want to do that with a mortgage because this is a different type of payout situation of if you were to sell your home. Um, but the market crash, hearing that this isn't a situation where we're like 2008 and
mhm,
people are going to foreclose. I know I've seen those social media posts where people are saying, oh, I can't wait till the foreclosures and everything's going to be cheaper. We're not in that
mhm.
situation. We don't have enough homes out there for people to just foreclose and nobody purchase them. There are too many buyers in the market now fighting for the chance to purchase those homes
Mhm.
that are way lower the count of homes. Because I think I'm in Winnebago County, for instance. I'll give you an example. Typically, it's like 1,500 homes in a good market. We
Mhm.
have gotten as low as 200 and below homes available in our county. That's a stark difference. So it isn't a situation where it's going to crash and you're just going to be able to purchase a ton of foreclosures. We aren't there.
Okay, so this is a good market. So this is I know I've
Yeah.
heard people say a buyer's market, seller's market. Is it kind of an even playing field right now?
It was more of a seller's market because there was less homes on the market. I would say maybe 2 3 years ago we were seeing where more people were paying above and beyond what the home was listed for. Now it's kind of easing up where it's evening out. It's still a seller's market for sure, but it's evening out.
Okay. Okay. In terms of a new construction, can I go through the bank or is that something that I need to do directly through the builder, through their
You
um through their financing?
Yeah, builders have like you can do like a builder's loan. No, you can go to the bank. So we can do construction loans. So we pre-approve you before the house is built. If it is one where the builder has a model home and say they have like homes around that home that they're
Mhm.
building, either situation, you can get pre-approved for that. And basically, we are working with you to do an initial loan for you to get your materials, get the house built, and then it would be reappraised at the end where you'll transition those funds into your traditional mortgage.
Okay. Good, good. In terms of refinancing, how long does one need to wait before they can refinance their home? Say they got it at a higher percent and now they want to go down lower.
There is no period of time that you have to wait. I can't speak for every lender, but most lenders now there's no prepayment penalties. So you shouldn't be charged for paying your loan off early, which refinance you are paying it off. But they're actually people will tell you different things, but that's based on their own opinion. You don't have to wait any length of time. If you bought the house this year and you want to refinance, if you bought it last year or 23, you want to refinance it, you can. If you bought it probably within the last couple of years, rates may have not changed enough for it to be valuable to you, though. You will probably, if you're a newer homeowner, want to wait till rates actually look lower and better for you to refi.
Okay, okay. Are you familiar with the term reverse mortgage?
I am. We do not do reverse mortgages whatsoever. That
Okay.
is a different lender where you have a homeowner who owns their home free and clear, and they
Mm-hmm.
are using the equity in their home
Mm-hmm.
to get money from it. So rather than like refinancing and establishing a traditional mortgage, they're basically being paid out by the equity that they have in their houses.
Okay, so is that some? Okay, well, you since you don't do that, we won't go into that.
No.
I heard someone talking about it, and I was just really intrigued because they were talking about for like senior citizens that don't want to pass their home down to their kids, and I was told that they receive a monthly stipend or a monthly check. So I was just like, wow, that's good.
Yeah. Well, I mean, in terms of you are still using the equity in your home. So it would be similar to, say you are a senior and you wanted to get cash or you needed it for some type of expense today. You
Hmm.
still could, that's the same thing as refinancing and having a smaller loan on it, or getting a home equity or a home equity line of credit and making payments to that. And because when you sell it, you will still need to settle that reverse mortgage too.
Okay.
So if, it comes to like that house is passed down to your children, they will still need to settle that. So it's not like
Okay.
you're free and clear from that.
Okay. So it's typically like a loan against the house.
Right.
Okay, okay, well, I don't know about that one. It was just told to me in such a flattering way. So is there anything that I did not cover that you would like to share with people that may be in the market, people that are preparing to buy a home or just don't know where to start?
If you don't know where to start, just reach out to a loan officer. The pre-approval process is what you want to do first, so you can have that confidence, know exactly how much you qualify for. If you just have questions, you don't necessarily need to pull credit and go through the full application when you call a loan officer. We are there to field questions that you have as well. Um, Even if it's credit related, you can always come to us. We're not charging you to have a conversation about credit either. One of those misconceptions too is that I find that people who are working to build credit, or maybe they know that they're having a little credit issue, they'll reach out to somebody who says that they do credit. And there's a lot of people who do credit. And you
Mm-hmm.
don't need it. You actually don't need to go to anybody who's charging you to build your
Mm-hmm.
credit. Nor do you need to have someone you give money to pay your bills. Don't
Mm-hmm.
trust that, because I've seen people who have went to someone or a company where they were charged for it. They gave them the money and they were supposed to make these payments on time. They were supposed to have these letters written, and those payments are showing up on the credit report late.
Oh my
Like, well, I'm
gosh.
giving them the money. They're supposed to pay it. No, be in charge of your own payments. Um, a loan officer can quickly identify what you need to do, tell you what
Mm-hmm.
you need to do. Your only your only walk away from that is to listen to the advice and do it. And you can always update us as you've already done the things that we told you, but you don't need to go to somebody who's specialized in credit. Is actually pretty simple. If you take out credit, you take out a loan, you owe it, you pay it. It's really simple. If you owe something, pay it back. Credit cards, those are not emergency funds. You don't use a credit card for emergencies. You save up and you have an emergency account. Credit cards
Mm-hmm.
are there for, hey, I'm going to put this on a credit card. If I like the benefits of that credit card, then I can get those benefits, but I pay that off regularly. You don't really want to get in the habit of using credit cards where some big expense came up and now you have it on a credit card and you're just trying to get by with making those minimum monthly payments.
Mm-hmm. Wow, that's impactful. So, does someone need to get a credit card? I know I've seen people say different things, and of course, you're the expert in the industry. So, if I don't have any credit cards, do I need to get like a secured card or a credit card to help build my credit profile?
You don't necessarily need to get a credit card if you have other things in your credit profile. So if you have student loans that are actually you're making payments on, that helps build your credit. If you just have student loans sitting there that you're not making payments on, it actually isn't helping or hurting most times. It's there and it's just taking up room in your debt to income ratio. It's only when you're in repayment and you're making those payments where it actually helps and improve. Typically, where it's affecting your score. But if you have an auto loan that you're making payments on, you have a personal loan, you don't necessarily need a credit card. Why people say credit cards is because it's the easiest way to develop and build credit. And that one is one where if you have changes, it could easily show within like the month to month cycle.
Okay. So, have you heard of the credit builder accounts like Self or I think Chime may have one? I think they're popping up all over now. Is that something that you guys will use as a positive credit
Yeah,
impact?
we definitely will. So I have plenty of clients who have self accounts or whatever the accounts, Chime, whatever, and it reports the credit. So that is an account that shows that you have good payment history and you're able to manage funds.
Okay. Okay. Now I know Afterpay, Klarna, all of those are very popular, paying for. Is
They
that
are.
something that would hurt a buyer in terms of purchasing a home?
They don't actually hurt you. So depending on those accounts is how much you actually have out there. Because technically, you do have something that you owe. So again, that's one of those situations where we do look at it in your debt to income ratio. So if it's, I think Clear knows, is that the one with four payments?
Mm-hmm.
That one you probably aren't so much going to worry about because you pay it off in four. But
Mm-hmm.
some of the other accounts, they could be at like for experience, expended period times, like 12 to
Mm-hmm.
24 months. We
Mm-hmm.
basically include those in your debt to income ratio.
Okay. Oh, that's amazing. That's good to know. So it doesn't actually hurt the buyer. Do they have to write a letter of explanation on why they're actually using these funds or these resources?
Yes.
Yeah.
Sometimes you do. Just what you use it for. Like I've seen, we've had letters written about maybe a vacation. You bought the school clothes and you're doing it in four monthly payments. However, it works for you. Those letter of explanations are normally pretty simple, and your loan officer should be able to direct you what the underwriter is looking for and understand why we're asking that question.
That's good. All right, so I kind of want to navigate over into the personal touch
Mhm.
for just finding out how you keep a balance. Like you say, you get phone calls at 7 at night. How do you find your balance in your career, in your personal life?
Uh, Still trying to figure that out. No, this is
For real, seriously.
this is one of those industries where it is very much rewarding, but it is a stressful industry. It's a job that never stops. We typically work while we're on vacation. Because if somebody calls you, you're not going to turn them away. And when you're a loan officer, you do handle your own clientele. If you have an assistant, you can have them reach out to your assistant during those times. But it is normal for in the evenings to get a text message, Saturday, Sundays. You'll get something while you're at church. You can get something while you're watching football. It does not matter. Um, and because people are looking on a Sunday at
Mhm.
an open house and they're calling you right away. And if you don't answer, then there's somebody else that's available to answer. So you kind of do have to be on top of that. That's kind of just where the industry norm is. This isn't necessarily a role you would pick if you're looking for a good work life balance. After
Mm,
you've established yourself for a while, you could be someone where, hey, I'm not taking calls at a specific time. But
mhm,
I've been in there and I'm still taking calls.
mm,
I will take calls whenever because I understand that everybody has a different work schedule.
mhm. I think that's what sets you apart.
Yeah, yeah.
Yeah.
It is what it does work to my benefit sometimes.
Yeah, for sure, for sure. So what advice would you give someone that's interested in becoming a mortgage loan officer, or what are
If
the steps that they need to take?
Yeah, if you're interested, we need more loan officers. There's quite a few less, actually. That's if we're talking about the overall real estate market, there's been a significant drop of real estate agents and loan officers
Oh wow.
because of where the market is. So if you are interested and you're coming through the banking route, reach out to somebody. I actually had one of the bankers at my branch the other day say like, "Hey, I'm interested in being a mortgage loan officer." I'm like, "Well, sit in on an appointment." Like I could always ask my client if they mind if I have somebody here. So shadow, do a shadow with an appointment or just to have some loan officer go over their day. If you're in the banking industry, it's kind of easier because you can transition into it.
Mm-hmm.
Um, Otherwise, if you're in the financial service industry, there's probably something in your resume that can be a transferable skill. And if you're talking to the right person, the right professional, they will kind of help guide you on what we're looking for. If you have sales experience, it is a sales role, so that's going to be great for you to transition. But really, kind of figuring out where you are, what your strengths are before networking, though, is going to be your best option.
That's
Having a
good.
good rapport, having a great personality, somebody who actually is able to listen and understand and move quickly, they're going to be most, the best kind of loan officers for that role. But also just talking to people because you'll never know who's hiring if you don't speak to people. Like industry
Mm-hmm.
wise, we have like plenty of events for the community, whether we are going out and just trying to connect with clients
Mm-hmm.
or amongst ourselves. So, if you know somebody who's in the real estate industry, just talk to us. Normally, we'll be like, hey, okay, well, we have this going on, invite you so you can meet some people. Let me
Mm-hmm.
introduce you to this person.
So networking is your net worth.
Yeah, it is. It really is.
Okay. Do I have to start off as a teller, or like you said, some of my previous sales experience or my previous retail experience will transfer over?
No, you don't. I am one of the lucky ones who started out from a teller and became a loan officer. But there's plenty of people who, whether they were doing like auto loans prior to, who switched over, whether they are a real estate agent or they switched over to the lender side. Um, that have come from any industry, really. You
Mm-hmm.
don't have to start off in any specific industry to transition.
That is very good to know. That's an excellent point. All right. So as we get ready to wrap up, I just have a few more questions I want to ask you.
Sure.
How is your involvement in programs like Leadership Rockford, Young Professionals Network? Well, I was going to say how has it influenced your work? Well, you just said networking. Is that just the main thing that you've gained from that?
It's networking, but also doing events in the community and understanding what people want to hear about. The kind of questions that they have, because I've done home buyer events with people where I get some questions. I'm like, oh, okay. I can kind of feel what people are looking for.
Mm.
Where it's become now, there's an annual brunch for that event. There's like give back to clients. There's a lot of avenues and things to keep up with, but Leadership Rockford, that's honing in on just your skill development, so you know how to network with people, know how to put on events. YPN is the same way. Young Professionals Network, we are putting on events in the community to real estate agents, to other clients, to teach people about the home buying process. Um, those are all just developing the skills and getting you comfortable with where you are.
Absolutely, absolutely. Are there any programs out there for first-time home buyers?
There's several programs. Most of them are going to be based on the state that you're in or the county that you're in, because they have like that minimum credit score of like the 640 typically, but
Hmm.
some of them will be based on your annual income or household income. So depending on the program, which is specific to that county. So talk to your loan officer and they can kind of direct you and give you some more information.
Okay. And in terms of a loan, I know I kind of went back a little bit to the home buying process, but in terms of a loan, can I buy a house with a friend, my mom, or just someone that I'm not in relationship with? Sorry.
Yeah, you sure can. Actually, I mean, you can buy a home with your parents. There is where you could be the person who you're buying it as a primary residence, but your parent is helping out, whether it be their income, whether it be their funds, and they're on the loan with you. You can do that to help with qualifying sometimes. If you're just with a friend, you can purchase a house together. If you're getting into investment opportunities, a
Hmm.
lot of times that doesn't necessarily mean to that you have to be in a relationship with someone. Depending on the state that you're in, sometimes you have a community property state like Wisconsin, where if you are married, there is a little bit of the disclosures and things that your spouse needs to be a part of. But
Mhm.
outside of that, no, you can buy
Okay.
it with any person.
So building a portfolio, how many homes can one person own at one time?
As much as you have the financial bandwidth for.
Okay,
Because
okay.
there are some people who have a portfolio where we're looking at like 30 homes. And that is it's a little bit more of a process where you have to look at the documents and the income. They have some very detailed tax returns, but that's our job to look through it. There's no limit. If you are, I believe it's getting over 7 properties, that
Mhm.
credit score is going to matter. Because at some point you need to have above a 700 when you are financing multiple units.
Okay, and if I just purchased a home, say 2024, how soon can I purchase an additional home to build my portfolio?
You can purchase it sometimes at the same time. I've done that with someone where they are purchasing the home at the same time, a month later, a year later. It really all depends on what you want to do. If you are looking to show the income from a rental to help you, because your rental income could help you with qualifying as well,
Mhm.
then sometimes you can wait like a year to show what that rental income was for you to use it the next time, but it really just depends on your financial situation.
Okay. That's very insightful for sure. Um, all right, so in closing, what's one of the most rewarding experiences you've had so far in your career?
I have several rewarding experiences all the time. I think it's rewarding when my friends, my family reach out to me and they want me to do a loan or look at some financial information. That is like the biggest compliment to me, is
Oh,
to have
wow.
my friends, family refer people to me, but also in working with people who feel like they would not ever own a home. The
Mhm.
rewarding experience that you have seeing that person at that closing table and just like, oh, I did it. Like I can breathe. Like I never thought this would be possible. Those are rewarding experiences. I
I
think
think that
that
says a lot about your character for sure.
yeah, the entire process is a good industry because I'm always meeting new people, always talking to new people. I love that.
Wonderful. Wow, that this has been very impactful. I hope that you guys either watching the replay or that's on our live. I hope you guys are taking copious notes and you are now removing the barriers of fear and
Yes.
realizing that your dreams of owning a home can become a reality.
Yes, and they will. They will. If you have questions for me, you can always reach out. I do have my lender Facebook page that you can go to and ask me questions. Always reach out. And I always tell people, if you know me, you know my cell phone number. They're like, should I give that to somebody? Like, yeah, you can.
Okay,
Share
wonderful.
that
I'm
information.
Yes, I'm going to share your information on our page. And if you're in the Rockford or Wisconsin area, or maybe even in the Texas area, then you can
Yes.
reach out to Shantrese and get some information.
Yeah, thank you for having me. This has been a great experience. I appreciate it.
Absolutely. No, thank you for saying yes because it was right on time for sure.
Yes, it was.
Yes. So before we end, I like to leave our guests, not our speakers, but our audience with a miracle moment. But you can take it as well. A miracle moment is a moment where you just sit back and you reflect on God and His moments. So,
Yes.
over the last few days, I won't go into too much detail yet because I haven't been released to say this, but I just want to encourage someone if you are looking at the White House situation, you're looking at what's going on in the politic industry, I encourage you to kind of pull back a little bit and not put your faith in who's in the White House.
Yeah.
This is the day of the Lord. This is the time to get serious about your relationship with the Lord. This is the time to really accept His salvation. Um, he gave me a very chilling message. Like I said, when I am released to share it, I will. But I just want to recommend you to really develop that relationship with Christ. If you don't know where to start, all you have to do is say yes. And I
Yeah.
promise He will come in and He will reveal Himself to you. So, again, take this miracle moment, take this moment in your life to get serious about your goals, get serious about who you are, because tomorrow's not promised for any of us. Death does not have an age limit on it. So you're not too young to give your life to Christ, and you're not too old to give your life to Christ. So I definitely want to recommend you, if you do not know Jesus as your Lord and Savior, to accept him in your heart. And don't think that you have to be perfect. God is not looking for a perfect vessel. He's looking for an obedient vessel. I don't want you to feel like you got to have yourself together. You got to stop smoking. You got to stop drinking. You got to stop doing all these things. That's how good God is, that when you say yes to him, those things will start to fall off. Those things will start to, the more the entrance of his word comes in, the more light you have in your life. I'm not saying that this walk is easy. I'm not saying that it's just like I said, a walk in the park, but it's definitely one of the most rewarding walks. And it will definitely take some of that stress and anxiety that our world is facing right now. So, yes, there's some things going on that a lot of people may not agree with, but we have to put our trust in God. We have to put our trust in God. Like, there is no other option, because it's not like you can change anything anyways. So why work
Mhm.
yourself up? Why get upset? Why get all into the social media rant? Why even lose friends or connections with someone because you don't like what's going on? Like, you can't do anything about it. So I just want to offer you that moment of peace. Take that time to just remove yourself from that process and trust that God has your best interest at heart. So again, that's our miracle moment for today. Thank you so much, Shantrese. It's been a great pleasure. Always good to see you. And you
Yes.
shared some very amazing nuggets.
Thank you. And that message is right on time. I've been doing that myself, taking some deep breaths. There is more that aligns us and separates us. That
That's
is
right.
right on time. And you've been giving us these messages as long as I've known you. So I'm so proud of you. I love
Wow.
hearing them.
Praise God. Amen. Thank you. Thank you. Well, I love you so much. And thanks again.
Thank you.
Bye.
Bye.
Take a little moment just to pray. I gotta give him praise.